you very much, Andrew. And thank you, everyone, for taking the time today to join us. In this brief hour, we hope to give you some valuable information on how to build the value of your business in case you want to sell it one day. Just a couple of housekeeping notes before I introduce my co-host. Don't forget, you've got chat options on the bottom right of your screen, so feel free to submit your questions. We will answer them about a quarter to the hour. So please submit anything you've got there, and we'll get to it for sure. If we run out of time to answer your particular question, don't worry. You can always email Andrew at bizlaunch.ca, and we'll certainly answer your questions following the broadcast. And if you've got any technical troubles, feel free to call 416-200-2572, or just chat to Andrew if you do have internet capability. Sometimes people have trouble with the sound. So if you've got any questions, do that. But meanwhile, I'd like to welcome my co-host, David Wilton, who's going to introduce himself, and then I'll tell you a bit about me.
Thanks, Roger. Dave Wilton, Scotiabank, Small Business Banking. We're situated in Canada. We have some international listeners to our webinar today, but we're situated in Toronto, Canada, and Scotiabank is a Canadian bank that provides small business banking services right across the country.
Excellent. Welcome, David. Thanks for having us today. My name is Roger Pierce. I'm co-founder of BizLaunch, and I'm an entrepreneur myself. I've had 10 small businesses over the years. Some have done well, some have done not so well, and we try to share some of that been there, done that experience with small business owners across the country and across North America. You can find out more about what BizLaunch does at bizlaunch.com. So let's go to the agenda page, and we'll talk about what you're going to learn today. Just so you're anticipating what's going to come up in the next few minutes, I'm not going to read this whole thing. We're going to talk about, why you should plan to sell now, even if you're not going to do it for years ahead. Some reasons to sell, some options, what is a standardized business system. I know David's got a lot of expert advice on how to build one of those. Other valuable assets you might want to consider developing for a buyer. We'll talk about that too. Pricing, timing, and taxes, very important considerations when planning the sale of your business. Some general tips to build your business value, and of course, some closing remarks and advice. So once again, we're going to get to your individual questions at a quarter to the hour, but feel free to submit them anytime.
That's a lot to cover in a short period of time.
It is. We're going to do our best and see if we can get through it all. So, David, I know this is a hugely challenging and complicated area for a lot of small business owners, selling your business. Why is it so important to think about it now?
Well, no matter where you are in the lifetime of your business, thinking about the finish line, as we refer to it today, really helps you focus on creating value over time. And in business, time can be your friend because it gives you the opportunity to create those things that will ultimately be valuable to a buyer. And when it's valuable to a buyer, they're going to pay you money for it. And in many ways, your business becomes your retirement nest egg. We're going to talk about a couple of different approaches to creating that retirement nest egg. But in a business, creating that transferable value over time is the real key to success.
And I think it's going to help small business owners to sleep better at night, knowing they've got a lot of these plans worked out, and when the time comes, whether that's sooner or later, things can just roll according to what they decide.
The advantage of planning is always knowing where you're going. Without a plan, without a map to get there, it's very difficult to get to your destination. So creating a plan, you'll hear a lot about that today, planning.
Fortune favors the prepared mind?
I think so.
Very good. Okay, so let's start and talk about some important areas.
Well, we talk about three primary plans that we need to look at for a small business owner. The first of those applies to anybody, really, a business owner or not, and that's creating a personal financial plan. And you'll often hear a lot of on the television and this time of year particularly, which happens to be RSP season, you'll hear people talking about the need to create a personal financial plan. So through our bank, through financial advisors, through our wealth partners, through planners, we have processes that are available to individuals to create a personal financial plan that will help build that nest egg. Particularly important for a business owner because you need to create value, you need to create personal wealth through a financial plan, as well as then addressing the second part of the financial picture, and that is a succession plan that helps you transition out of your business and capture the value that you've created in your business. How do you build value in a business? That's the third plan. It's a business plan. most business owners are familiar with the concept of the business plan, but within the context of ownership transaction, what you're really doing is making sure that you're building value over time and creating it in such a way that it becomes transferable to a new owner, and you can generate cash from the sale of your business.
Kind of like a three-legged stool, those three plans supporting your eventual goal to have a better life and get on to new and exciting things.
Exactly. That's right.
Very good. Well, we'll come back to those three plans again at the end in case you missed some of that. I think it's important to talk about, what are the reasons you might want to sell. Now, as a business owner, I know it's your baby, it's your best friend, also your worst enemy at times. We all love our small businesses, so why would I possibly want to sell it? Well, there's a number of reasons, and some of them might not come up for years. But the important thing is the plan is that they might. You might want to take money out of your business. You might want to retire or simply reduce your working hours. My father-in-law did that, sold off the bulk of his business a few years ago, but kept a little piece of it for that. That still pays him a little bit of money. Leave a legacy to your family, obviously a big one if you've got kids that are interested in running your business one day. You might want to start another business. I know one fellow who's waiting out a 3-year earn-out package on a business he sold for millions, and he's already taken some of those millions and invested in little startups. You might want to realize a certain amount of money from the sale of your business and do the proverbial sail away into the tropical seas and enjoy a different type of life away from business. So there are lots of different reasons why you might want to sell, and to each his own. I think, we're going to talk a bit here about some other options to sell. So we talked about reasons why you might sell, but just as important is know your options to sell. And we're going to give you the high-level rundown here and see if we can talk more about these as we go along. Number one, someone might want to sell to a family member. Could be your children.
That's often an objective with small business owners. They want to pass along a legacy to their kids.
Yes.
And so the whole idea of transferring to the kids and figuring out how you do that, is it the right thing for you to do? That can be a very important conversation to have.
What are some of the challenges that come up when you're selling to family members?
Well, there's always the matter of, do they have the skills to be successful in business? And there's many things that you can do. I remember one business owner in particular who took one of the kids into the business when they were fairly young and began to prepare them, but then sent them off to a competitor to work for a competitor in the same industry as a way to learn more about how the business works. They came back eventually and were very successful when they eventually ran the family business. So figuring out what that training is going to look like. You also have to think about the kids that may not take over ownership of the business. And so having a good plan in place with a financial planner who can help equalize income and give you some strategies so that everybody's treated fairly, that's important.
David reminds me of good advice throughout all these slides. Work with your team of advisors, your financial planner, your banker, your legal advisor, your lawyer, your accountant, and probably a business evaluator once you get down and nuts and bolts of selling your business.
That's right. The other issue you have to think about as you're transitioning to the next generation is how are you going to give up control? Because it's very difficult when you own the business, you've created it from nothing, to start to hand that business over to the next generation. It can be done well, and you can train, pass it over, and then fade out of the picture gracefully, or it can be done very poorly and create a lot of problems. So thinking that through is an important discussion to have with the family, as well as thinking it through on your own.
Good advice. It can be a tricky process for sure. Well, what are some more options to sell your business? You can sell to a partner. If you're partnered with someone, maybe they own 50% or maybe they own a smaller percentage, that might be your best choice to exit your company. You can decide to sell to a third party. And I know you've got some experience, David, with brokers and mergers and acquisition firms, but if you sell to a third party, please, folks, make sure you bring in qualified and professional representation. And there are two choices you usually pursue.
Well, when you're selling a business, you can use a business broker. For smaller businesses, that will often be the way that you go. Depends on the complexity of the business, too. If it becomes a larger, more complex business, you might need to look at a mergers and acquisition specialist. But professionals, for example, there will be brokers who specialize in dental practices, for example. So each industry is a little bit different, but understanding what your options are by speaking with your peers, again, speaking to advisors, is the way to get that information.
I remember you raised this point, very good advice. try to get some history, try to get some examples from people who have sold before.
Yes, there's always the wisdom of experience. Yeah. And so we work with various organizations across the country, the Canadian Federation of Independent Business, various professional associations, who can be a real help to you by connecting you with resources who will help give you some perspective, and you can sit down and have that conversation and learn some of the do's and don'ts. The other thing I mentioned, you talked about transferring to a partner, but the other option within a business is to transfer to existing employees. And so there are situations where employees will buy out the business, and that becomes also a very complex process that you can use various mechanisms, employee share ownership plans to begin to migrate ownership to employees. But it's another option that you might consider.
Great way to leave a legacy, too.
Absolutely.
Other than selling to family, is to leave it to your employees.
I want to talk a little bit about the process of building value within the business. And this is particularly important because there will come a point in time that you need to take your business to market. And to really understand what are those elements of your business which will be A, transferable, and B, have value, is critical to ensuring that you're able to optimize whatever the selling price is going to be. You think about a business, it really is a combination of tangible assets, so the physical things that you own, the building, in the case of a manufacturer, the plant, the equipment, those physical things that you've accumulated through business. The reality is, though, people can go out and buy those virtually anywhere. So the incremental value you're able to bring to the business is really those intangible assets that you add to the mix of tangible assets. What do I mean by intangible assets? Well, the typical ones will be goodwill. That's what your customers value, your customers see in the business. You may have patents that are often intangible assets, but you also have processes within your business. So all of those things that you've created that ultimately go together to create what we call a standardized business system. And I like to think of a business as a system because a system does something. In the case of a business, a system generates profit over time. And so when you're thinking of selling your business system, how can you ensure that it's going to generate profit in the hands of a new owner? What would you think would be the biggest obstacle to making a business transferable?
Getting it out of the owner's head?
Well, yes, or getting the owner out of the business. Because in many cases, a business ends up being the owner. And if you are selling it and the buyer cannot see any value beyond you, you don't have a transferable asset to the degree that you would if you could create a standardized business system where the intangible assets and the tangible assets all work together to create the highest level of profit. So creating a process that's well documented, make sure the systems within your business are documented, make sure that you have the right employees that will be able to carry on the business without you there, and then creating a plan to remove yourself from the business over time so that a buyer can see that they're buying a turnkey operation.
Really important stuff for every small business owner. The best example I can think of there is maybe a restaurant. You've got to write down all the secret ingredients to those recipes that your customers have come to love over the years, as well as how you run the restaurant. What time do you open up the doors? How do you market to your customers? What are all those procedures that you follow that use soft and hard assets to create those business systems? If you can package that up for me and give it to me, I'm interested in buying that from you.
Yeah. So your business becomes a system, whether it's a manufacturer or a retailer, it's one that you can transfer to a new owner.
Very good. Well, how do you, or what are some of the benefits of worrying about this? I mean, standardized business system, it sounds like a lot of work. Well, it doesn't have to be. I would say the first thing you have to realize, and David's going to talk more about this in a minute, is you've got all these systems in place now. You just simply need to document them. I know we'll come back to that in a minute. But here's why you should bother. It makes it possible for someone else to buy your business. It makes it more competitive. So other people, other companies out there will have a tougher time dealing with you, and you should make more money as a result. Also, systems, I find, even the simplest things like writing down how you answer the telephone or how you order inventory, those should make your company more efficient and therefore reduce your costs. So you're going to raise profitability by being more competitive. You're going to have more business come in the door, and at the end of the day, you're going to reduce some of your costs, all by simply creating those standardized business systems.
Exactly. It all goes together to create that long-term goal of creating transferable value. So we talked about identifying the tangible and intangible assets within your business. And then the next step beyond that is, as you described, to document the process. So are the systems documented for all employees? Are there policies in place that will protect what you have built? Those are all elements of creating the standard business model. If you're not selling a product, but perhaps a service, you can still use the same model because you can package the service like product. An example of a service could be somebody who is a decorator. So the value in the business really becomes their skills in doing decorations for homeowners, but obviously they're going to be leading the business. So if you can create a group of people who can continue that process, document your systems, and build it so that it's valuable in the hands of the new owner, you can create that service and essentially create a product out of a service offering.
Good trick.
Well, hard to do, but it's one of the ways that you can standardize a service offering.
And as you're seeing there on your slides too, what I really like is I'm always worried about getting paid as a small business owner. Is as a service packaged up like David described, you could charge like a product and charge up front.
It's one way to create a repeatable cash flow in a business is with standard service agreements.
One of the problems that happen with small business owners doing services is they tend to charge a little bit, and when the job is done, and that's very tough on cash flow.
Correct.
Good point.
So you're going to keep parts of your business. You described a situation where somebody wants to hang on to part of the business in retirement. You have the opportunity to look at your business system and to pull off pieces of that may not contribute to the core value of your business. And this is another way to take a little bit off the table when you're selling a business. You may want to hold back a part of the business. Perhaps there's real estate that the business owns. You want to hang on to the real estate. It will continue to generate income from you and sell the business operation itself. So part of the process of looking at what you're going to sell is identifying any pieces that you want to remove from what you're ultimately going to sell. So looking at other assets and other things that can deliver value when you go to sell.
Again, I'll remember my father-in-law, business owner, who kept his building when he sold his firm. So his buyer became his tenant.
That's right. And if you start your planning early, which is a key message for any business, is you can start to remove some of those assets at the right point in time. So you may want to create a holding company, for example. You need to talk to your accountants, you need to talk to your lawyers about the process to move a holding company that might hold on to the real estate assets. You may want the holding company to be owned by a family member so that you can do some income storage. Or potentially it's a way to start dealing with some tax issues by moving shares of the company into the hands of kids who may benefit from the income. And from a tax point of view, you may want to shelter that income with the ultimate owners of the business in a family situation and reduce the taxes yourself. So there's a bunch of different strategies.
Yeah.
And again, the fundamental principle, make sure you're talking to the right advisors. At Scotiabank, our small business advisors will work carefully to help make sure you have the right advisors on your team. That will usually include folks like business bankers, accountants, lawyers, business valuators, Financial planners, wealth planners, all of those can help create some of the solutions that you're going to need in the long run.
We've actually had our company small business banker, Mario from Scotiabank, come by the office for coffee. And he's more than willing to meet with our team of advisors to make sure our growth plans and selling plans fit.
Perfect.
So it was nice to see him coming. Some of the other considerations too, David, we talked about earlier on, but we'll highlight them again here. Price, timing, and taxes. First of all, you've got to figure out how much you want to sell your business for, but that's not always a direct answer because it all depends on what your future plans are. Like you talked about, the three-legged stool, the three different plans. So you've got to figure out your selling price, and that's where your team of advisors can really help to make sure that it all fits together. So, for example, if you needed $2 million to retire and you're looking for $1.5 million of that from your business, that needs to be worked out with your people to make sure you get what you need.
And because business valuation is primarily a function of the revenue of businesses generating in the years immediately before the sale, as well as a multiplier which will reflect the degree to which the new buyer can expect that revenue to continue in their own hands. By addressing revenue and the transferability of your business to a new owner, you can begin to estimate what a market might pay for your business at some point in the future. But it is very much an art as opposed to a science. Business valuators will have methodologies that will allow them to use formulas to project some of that, but they'll also factor in similar sales, market conditions, and the time between when you're getting the business valued and when you expect to sell it.
I know it's not on the slide here, but can you briefly explain how the multiplier works? I know that's a term a lot of entrepreneurs hear.
Well, again, this is always a point where bankers need to be careful to make sure that we're not doing the work that the advisors who we refer you to should be doing. And in this case, we refer you to a valuator who would be able to tell you, well, what are the factors which will create a higher multiplier for your business? In other words, make it more transferable to a new owner. Or some of those things that might make the multiplier lower. For example, one of the critical issues is the business you? If the business is you and you haven't taken steps to make it transferable, the multiplier will be very low. And in fact, in some cases, you may just get the value of the assets if you are not able to create a business system that you can sell.
A good opportunity for me to segue and give a shameless plug to some videos that now appear on the GetGrowingForBusiness.com website. Some great succession and selling your business tools, just went live, I think, this week.
That's right. So the videos are designed to give you more information about this subject. There's also an ownership transition tool that goes through a couple of case studies and gets you to think about some of these issues for your own business. So that's at GetGrowingForBusiness.com under the tools section of that site.
Check it out for sure. Going along with price and timing, as David talked about, is the tax issue. And again, there's not a whole lot of space here to get too deep into the subject, but it is complicated. Deal with your advisors, your accountants, and your lawyer, and your financial planner, and your bankers should be able to help you with the tax issue. For example, they might advise that now is the best time to incorporate if you aren't already incorporated, if you're planning to sell your business down the road.
Well, that's all part of the personal financial plan and the succession plan. By dealing with some of the structural issues early as part of an estate plan, and an estate plan is really a contingency plan. What happens if the unplanned happens? And so wills are part of an estate plan, making sure that you had anticipated some of the tax issues. And again, this is when you need to be working with a financial advisor and also with the right advisors such as accountants and lawyers who can structure that for you.
Important advice. Entrepreneurs, we think we know a lot, and we typically know a little bit a lot of things, but I really encourage everyone to consider talking to their team of advisors when they go through this process. In fact, you're going to need to, because it can get a little complicated. Lean on your advisors.
So we've talked about this subject a fair bit, tips on building value, and we talked about this idea of removing yourself from the business. So I'd encourage people to really think that piece through. The one way to plan your exit from a business is to consider either formally appointing a chief operating officer or a manager, or depending on the size of your business, somebody who you will systematically move over the management of the business. There's ownership of a business, which is I own the shares and therefore earn the income, but there's also the management of the business. So you need to consider both aspects in an ownership transfer. What's the right process to move management of a business over? And that should be done well before you move ownership, actually selling the shares. So a chief operating officer, somebody who's going to fill your shoes and will go along with the company when it's sold, is one way to achieve that outcome. One way to ensure that they are actively involved in the process is to make sure you reward them for their success. As with employees, you want to protect those key employees, so you need to take steps to make sure that they see the advantage if they stay on with the business, and of course that will help increase the sale price too, because you're protecting that standardized business.
You want the employee to be willing to go to the new buyer or stay with the new buyer. You want customers to stay intact. You want a management team that is separate from the owner.
Correct.
And we're all human beings. To do that successfully, you're dead on. Tie in some performance incentives to those folks, so they're willing to play ball with the new owner.
Well, that's one strategy, exactly.
Yeah. I think just going back to the other slide, maybe if we can for a second. I think it's important to talk about that third point too. In doing so, the caveat is we don't want to ramp up too many fresh employees and diminish the profitability of the company, right?
Well,
impact the bottom line.
Yeah, it's rather than hiring new employees, it's very often an existing employee who you can cultivate and prepare for that role. Again, when you think of ownership transition, don't be thinking about this as something that you're doing in the 2 or 3 years immediately before selling the business. Ownership transition is something that happens over the lifetime of a business. And that's why we talk about preparing for the finish line early. If you start thinking these things through, identifying those employees within your business who you can begin to move management responsibility to, then ultimately you're going to have a much better outcome than if you try and put somebody in there at the last instance. Now, you can hire people with the skills, and that is an alternative if it comes to the 11th hour and you don't have the right people in place. It's better to find the right people and hire them than try to, as somebody used to tell me, make a purse out of a sow's ear. It just doesn't work. So find people who really have the skills and you can develop over time, or if they're not available, then that's when you have to look to hire someone and bring somebody in.
Once again, planning in advance should take the pressure off the last minute scramble, get the right people in place and do it slowly and planning. Good comments. Okay. So I think we're going to move towards the final remarks and just a couple slides of general comments, and then we'll get to some audience questions. David, this first bullet is definitely the message I think that folks should take away from a lot of this. Work with your team.
That's right. The process is identifying those elements of your business that you're going to have to focus on in order to create transferable value. Think about how your business system works. Look at the individual elements that are generating profits for your business, because that's what you need to maximize, particularly in the final years of your business. Create a plan, a business plan, that addresses those things and strengthens them in the latter years of the business. Sometimes the temptation may be to retire early, but you're going to pay the price for that. So the final years of a business need to be the point at which you're maximizing profit, which you have predictable, transferable revenue that a new owner can anticipate enjoying.
And that's what they're going to pay the money for.
Correct.
Something that they can walk in, a turnkey operation. This next bullet, though, how can I make it easy for someone else to run my business? That's a very good guiding question. So maybe post over one to monitor a computer to make sure they do it. But I have a little spin to that. What would you say to a small business owner who says, there's no way anyone else could run that business?
Well,
it's very common.
That is going to be a problem.
Yeah.
If you are your business, unless you're prepared to stay on and teach the new owner, which some people do, but it creates a situation where you will continue to be involved with the business and you will continue to really rely on your own capabilities to generate income for the new owner. So what we encourage people to do is to find ways to make sure that the business runs on its own, that what you do is repeatable, it generates a high level of profit, and that you can move away from the picture. You should even consider doing it as a trial retirement before you actually leave to make sure that the business will run without you.
Take a long vacation.
Yes, longer and longer.
And surprise, surprise, the walls actually stay up, and that means you've built a transferable business. There's very little in a business that can't be taught to someone else, in my opinion. I get this question a lot in webinars and seminars. And most things in the business can be transferred to another person. You just have to take the initiative to write them all down and to train someone and to transfer that stuff.
Yeah. So we talked about the three businesses, the three plans, and again, just revisit that quickly because they all work together. Personal financial plan will help you build wealth in your personal estate, and so working with a financial advisor to create a nest egg and to build that estate plan that helps deal with those contingencies, that unplanned events that may occur. You need to have a strong business plan to make sure that you're creating a standardized business system that generates strong profits. And then you need a succession plan that ties the two together. A succession plan that allows you to achieve the best value, decide who you're going to sell to, when you're going to sell, how you're going to create value, and put all those things together in a way that delivers the best sale price and leaves you with an even larger nest egg so that you can enjoy life after business ownership to the greatest extent possible.
Which I think is the goal of most entrepreneurs, years of hard work to pay off, and whatever those rewards look like to you individually.
Correct. So these are a couple of slides that can give you some resources. We've mentioned a few of them already. Obviously, our small business advisors across the country are able to sit down and speak with you about these issues and give you access to advice and information on this topic or any other small business topic. We've given you the website that I mentioned before, getgrowingforbusiness.com. Encourage people to drop by that site. There's a blog there where you'll find people talking about this subject as well as many others. There's tools, articles, and a variety of resources that will help you deal with succession and other small business issues. On the final, if you need to speak to somebody by phone, we've given you a phone number here where we have a team of small business advisors who can take your calls and refer you to the people that can help.
Come on in for a chat. Really, this all needs to happen right away.
That's right.
To see if there's some help that can be realized from someone at the bank. I know it's there for you. As David also mentioned too earlier, we've got some great videos on that website, folks. Please check them out at getgrowingforbusiness.com, where we drill down a lot more into the subject matter on building value for your business, how to negotiate the deal, preparing for a buyer and transferring all of your business systems over to the new buyer, and all that stuff is there on the website. So please feel free to watch and learn. Good. I want to thank you, David, for your time today. We're not quite done yet, so we're going to get to some questions. But I want to thank you first of all for putting this all together, and I know there's some great lessons here that I hope our audience has enjoyed.
It's been a pleasure, Mike.
Well, now we get to turn to your questions. We've got 20 minutes left, and I know we've got our trusty technical operators here ready to pass them on. So let's start at the top. Which one do you say? Look at all these great questions. Okay, you're going to earn your keep today, David. Bear with me here, folks. So I think the first question, if my tired old eyes are reading properly, is from Sue. How do you find a buyer if you don't have a broker?
Well, exactly. First of all, a broker is a way to find a buyer. You're essentially paying somebody else to go through the process of trying to identify somebody who would be interested in your business. So, Sue, if you're asking, how would I find a buyer if I was not using a broker? The strategies like networking are often a way of identifying people who may be interested in your business. You can talk to other people who are in similar businesses, although you need to balance that one, because once word gets out that you're selling your business, it could potentially put you in a difficult situation with customers who begin to worry that you're leaving. That's why a broker, who can sometimes do that sort of thing discreetly without it becoming public knowledge, is often a way to go.
Just to add to that, David makes good points, Sue. I would ask, why don't you think you need a broker? Let's say if you want to sell your business, I'd say maybe it's time to go and interview a select list of brokers.
That's right.
And they'll walk you through the process. A good broker, and David could add to this, will have a network of buyers probably already. That's one of the things they're paid for, and they make it their commission, and they may get a retainer.
That's right.
And the broker will prepare a selling memorandum, which kind of is the
overview for your business.
Yeah,
that's right.
Like your house listing. Yeah, you put your house on a listing for this. Well, they'll do that for you, and then they'll start to shop it around. And they're going to then handle all the offers that come in, or tell you there's some adjustments that need to be made.
But, Sue, it's a great point. Finding a buyer is a difficult thing, particularly if you have a specialized business. And so I don't want to minimize the reality that can be one of the key obstacles in realizing a return from the sale of your business. So brokers, yes, and certainly if you choose not to go that road, it's going to be a bit of a balancing act, because you're going to have to talk to people about whether or not they're interested in your business. Employees sometimes is a good place to look, but again, use time. Time can work to your advantage if there's somebody within your business who could potentially become a new owner.
Good point. Good point. Sue, hopefully that's helped. If not, let us know, and we'll answer again. Let's take a look at the next one here. Not sure if I understand that one, but I'll read it. What if it is a very unique business and the owner operated with no employees, but does have services that rent space from them?
Sounds like a very specific situation that Sue has. Mm-hmm. And so the services that rent space from them, it sounds as if it's a premises where other businesses are renting. So clearly a unique situation. I don't think I can offer a pat answer to that, other than to suggest that start networking and see if there are other people that are interested in buying that. Can you demonstrate the revenue that your business will generate, and can you demonstrate that revenue will be sustained in the hands of a new owner? Buyers will buy revenue streams. So if your facility does have that, potentially there will be investors that will buy that.
Okay, that's good hope. And also too, along those lines, to make sure you go and talk to your advisors, your banker, your lawyer, your accountant. They will be able to answer some of these questions too, given your unique situation. Okay, what other questions have we got here? Are there consultants that specialize in working with companies to help owners build a standardized business system? How do you find them? Good question.
Well,
how do you find something like that?
A standardized business system is another word for strong business.
Yeah.
And so, yes, there are many advisors who help you build a strong business, and if the objective of that business plan is to make it transferable, then working with those who work with small businesses to create strong businesses is exactly what you're looking for. BizLaunch is exactly one of those companies. That's the kind of thing that you do. Our small business advisors across the country, through our network of branches, will also have contacts with local business development groups who can potentially assist you. I've mentioned the Canadian Federation of Independent Business. They have resources that are available to their members that you might want to consider. There are consultants that you can find by doing web searches, but tread carefully and make sure you get your references.
Yeah.
So those are some ideas. The standardized business system is a concept that we've developed at Scotiabank, but really it's a strong business to an effective business planning process. At our website, getgrowingtobusiness.com, we also have a free business plan writing tool that will help you address some of these issues, and you can build your own business plan.
And books, too. Read lots of business books. I know Andrew, my partner, reads a book a week, and you'll find some great book listings on Biznox.com and also look at Scotiabank. So, bottom line is you've got to build this thing yourself. You can get some advisors to help you in certain areas, but I wouldn't recommend passing it off to one person. It's something you have to do your own.
In any case,
yeah, good advice. Here's another good question. Is it costly to have a business broker? I guess it depends on how you look at it. Any thoughts on that, Dave?
Well, yeah, good point. Is it costly to have a business broker, or is it costly not to have a business broker? You can look at it either way. You're going to pay a commission to the broker. So what we suggest is you interview one or more brokers, find out exactly how they operate, what their commission structure is, will they want a retainer. Retainers are not necessarily a bad thing. A retainer often makes sure that you have the attention of the broker because they're going to have to do a lot of work on your behalf. So that's the best way to get information about the commissions that a broker would charge when they work with you.
Mm. And again, as we talked about earlier, try to check some of their references and talk to people who have dealt with those brokers before. This is a very important part of your transition team,
right?
Obviously, the brokers. So do your background check and get as much information as you can. But David's right. I think it's important to talk about the retainer issue for a second. A lot of entrepreneurs will have the attitude of if they're any good, they'll sell it for me, and I'll pay them when they sell it. But to be fair to the brokers, they want to see some skin in the game as well.
Right.
And to ask for a retainer, a reasonable retainer, demonstrates to them that you're serious about selling your business. You're not just going to go shop for some offers on a flyer. And a lot of professional firms will want a retainer from you to get that kind of commitment. Nothing so serious like the exchange of money.
Yes, but your point in getting references, make sure you're comfortable with the broker that you engage, interview more than one, and make sure you have a good match.
Good tips. Okay, we've got some more questions. If you've got any more, folks, feel free again to chat them into us. Let's see if we missed one here. Here's another interesting question. Is it possible if you're selling your business to keep your name? I'll start the ball rolling there. It is entirely possible to keep your business name. During the negotiations with the buyer, you can do just that, negotiate a number of different things. But you've got to ask these questions of yourself before you even begin the process. As we talked about earlier, what parts of the business do you want to keep, if any? And if your name is one of them,
that's right.
That can happen.
If your standardized business system has built a brand for your business, it may well be an integral part of the business's long-term capability to generate revenue for the buyer. So if you choose to keep the business name, you may in fact be reducing what you can realize when you sell the business. So you need to factor that in. I know there's a lot of personal ownership in the name of a business, and some people do keep their business name, but you have to consider both the pros and the cons.
David raises a good point, and putting on my marketer hat for a minute too. This is why I really prefer small businesses to develop a proper brand and a separate name from their own. John Smith Carpentry is not going to be as easily transferable in some cases as Ace Carpentry Company that's built up a brand and trademarked that and done all those things to separate it from the owner. So I know it's easy to go and register your business name when you're starting out as your own, but it's probably better long term if you're going to sell your business to build a separate identity.
And I think you just gave another reason to plan well in advance of selling the business. So if your business name is going to be sold with the business, make sure it's one that's saleable,
one you can pass along to someone who's going to pay you a lot of money, hopefully, for it down the road. So let's see if we've got some other questions here. We've got a question asking, maybe we'll follow up on that one question later, asking for a location of a particular business advisor in Ottawa. Again, I would say go and talk to your local Scotiabanker to get that process started, and your local banker will be able to refer you to more people as you need them. You should also consider talking to your local enterprise center in every city in Canada. There's small business enterprise centers. In the States, there's a small business administration and their site. So feel free to contact your local free government representatives to get some help finding advisors in your community. What other questions have we got here? Andrew? I think we've answered them all. That's great. Again, if you didn't think of your question or you didn't want to send it in, feel free to email andrew@bizlaunch.ca anytime after the presentation, and we can certainly address your inquiries one-on-one, and we'll make sure that David or I get your message. And of course, there's lots of great resources available on techgrowingforbusiness.com. We've got a couple of minutes left. A reminder, too, that this webinar is being recorded, so people can enjoy it over and over again. In case you were frantically trying to write down notes, no need to. You can enjoy it as an archived version very shortly. Final comments or thoughts?
Well, again, we recognize that ownership transition for small business owners, whether your objective is to pass it to the next generation in your family, to find a third-party owner, these will be emotional times for some business owners. But by thinking well in advance and creating a plan not only for finding the buyer and going through the process of selling the business, but considering what your vision of life after business ownership is, making sure you have some other interests outside of the business so that you can cultivate a rich post-business ownership life. That's all part of creating a good succession or ownership transition plan. It can be done. It is done successfully. And small business owners, by planning carefully, are able to ensure that they receive the reward for the investment that they've made throughout their business life.
Very good point you raised. Look after yourself. Figure out what you want to do after you cross that finish line.
That's right.
So there it is, folks. We've got to remember to plan, and plan again. We've got to assemble a team of talented advisors, our banker, our lawyer, our accountant, and maybe a business evaluator. We've got to build that standardized business system and make sure you document all the things you do well in your company and put in place a team to run those systems and back out of the business a little bit so that the business can be proven to be run without you. Work with qualified representatives in terms of a broker or a mergers and acquisitions firm to actually go out there and engage some prospects, prospective buyers. And again, work with your team. I think that's really, really important. As an entrepreneur, I've got so much in my head. I don't know enough about this stuff, and I'd rather work with people who do. So once again, on behalf of Scotiabank and BizLaunch, we want to thank you for coming here today, and we hope you'll join us for the next webinar. Thank you very much, and continued success with your small business.
Thank you.
Okay, everybody. That was lots of fun. Everybody learned a couple of things about selling your business. Just remember, if you've got any questions, just feel free to email us. Send us an email. Let us